Tax returns are annual drudgery, but they matter. They matter for individuals, businesses and investment entities. Everybody must file one, or more than one, depending on how many entities you have. You may have state taxes to file too. You might think your filing date is obvious, and hopefully before the deadline. The one everyone knows is April 15th. Of course, that date moves slightly, such as for 2021 returns, when the due date was April 18, 2022. Business entities face other due dates. So what's the big deal about when you file? Proof, for one thing. It can become important to prove when you filed because of the statute of limitations. Wouldn't it be nice to tell the IRS, "Sorry, you are too late to audit me"? The overarching federal tax statute of limitations runs 3 years after you file your tax return. But there are many exceptions that give the IRS 6 years or longer. But starting with the normal 3 years, how is that counted? If your tax return is due April 15th but you file early, the statute runs exactly 3 years after the due date. There are plenty of IRS statute of limitation rules and tips here. Filing early does not start the 3 years early. If you get an extension to October 15th and file then, your 3 years runs from then. On the other hand, if you file late and do not have an extension, the statute runs 3 years following your actual, late, filing date. With California tax returns, the state gets an extra year, 4 years from filing. Check out more California statute of limitation and controversy tips. If you somehow end up filing with the IRS late, days, or even years late, you want to measure the IRS 3 years from your actual filing. In tax audits and disputes, your actual filing date can become pivotal. A huge recent example is the 9th Circuit tax case of Seaview Trading LLC et al. v. Commissioner of Internal Revenue, number 20-72416, 9th Cir. May 11, 2022. The IRS proposed a $35.5 million tax bill to this California-based partnership. Seaview went to U.S. tax court saying it was wrong, arguing that the IRS was time-barred. But the tax court agreed with the IRS. On appeal, the 9th Circuit rocked the IRS back on its heels. And it all came down to the tax return filing date. In 2005, the IRS was asking for Seaview's 2001 tax return, and Seaview handed it over to the IRS in 2005.